Hey everyone, there's another IPO of a fundamentally strong company opened on 14 December. It's Inox India IPO. The most interesting part of Inox India business is its unique business model. In fact, Inox India also had a role in the success of Chandrayaan-3 project where it worked with ISRO as a key supplier. Its IPO window is between 14 to 18 December. Now if you're following my channel, you would know that I don't discuss every IPO. I only cover the IPO of fundamentally strong companies that have potential for long-term wealth creation. Last time I discussed Tata Technology and it got listed at crazy premium. Unfortunately, due to this current craze for IPO in India, a lot of you would have not received the allotment. Even I did not receive the allotment. But there's again a hope to get the IPO allotment for Inox India. Now, one of the key reasons behind success of Tata Technology IPO was its attractive valuation and of course the promoter pedigree. And Inox India is also launching IPO at an attractive valuation. So in this video, I would discuss why Inox India is looking very promising for long-term wealth creation. For IPO gain on the listing, I'm sure you know how to check the grey market premium. But this video is only for serious long-term fundamental investor who look at IPOs beyond just listing gain. Moreover, some people have this concern over the fact that this IPO of Inox India is a complete OFS, that is offer for sale. So I'll also discuss whether this is good or bad. Having said this, please note that this video is only for educational purpose. Kindly do your own research before applying for the IPO. Alright, let's get started. So first of all, Inox India is the largest supplier of cryogenic equipments in India in terms of revenue as of FY23. Now the question is, what is cryogenic equipment? Basically, cryogenic equipment specializes to operate in extremely low temperature environment, typically below 150 degrees Celsius. Hence, they are used to store and transport cryogenic liquids like liquid nitrogen, hydrogen, helium, etc. And they find usage across industries like life sciences, space exploration, food processing, electronic sector, and so on. Especially, there is a growing demand for clean energy that include hydrogen fuel and liquefied natural gas, which is a cleaner alternative to traditional fuel. And that's where cryogenic equipments are extremely useful in storage and transportation of these cleaner fuel, which is very efficient. So I hope you got a basic sense of cryogenic equipment and its usage, which is the core business of Inox India. It has 30 plus years of experience offering solutions across the design, engineering, manufacturing and installation of equipments and systems for cryogenic conditions. Broadly, its business is divided into three segments. First is industrial gas. Now this division manufactures, supply and install cryogenic tanks and system for your storage, transportation and distribution of industrial gas like your green hydrogen, oxygen, nitrogen, carbon dioxide, hydrogen and provide after sale service. Then second segment is LNG, that is liquefied natural gas. This division manufactures, supply and install engineered equipment for LNG storage, distribution and transportation. And third segment is cryoscientific. This division provides equipment for technology-intensive application and turnkey solution for scientific and industrial research involving cryogenic distribution. If you recall, Inox India contribution in success of Chandrayaan-3 falls into this third segment, where it works with ISRO and other space research projects as well as your nuclear research projects. If you look at the revenue breakup, as of FY23, industrial gas contributed around 70.8% in revenue, LNG contributed 24.9%, and your remaining 4.3% has come from your cryoscientific segment. If you look at the revenue breakup by geography, in FY23, 55% business has come from domestic Indian market and 45% is from export. So a large chunk of its business comes from global market. It means it is not only dependent upon Indian market. In fact, company has operation in more than 60 countries and has around 1255 domestic client and around 254 international customer. Company has got 3 manufacturing facilities as of today and 4th one is under construction. As far as order book is concerned, company has an order book of around 1036 crore as of September 23 and its FY23 revenue stood at 984 crore. So company has a healthy order book. Now let us try to understand the key moat of the company. So company's biggest moat is its leadership in supply of cryogenic equipment. Inox India is in the business since more than 30 years now and it's India's largest supplier of cryogenic equipment. That itself speaks a lot about company. Further, it's export the equipment to more than 60 countries. It means its market is not just limited to India. It's very well placed to capitalize on global opportunities. Moreover, the entry barrier in this industry are quite high. It requires specialized technology to manufacture such equipment. Since these equipment are used in very critical functions, every company would like to rely on well-established players rather than trying new players. That further strengthens Inox India moat. Moreover, Inox India has its presence across your cryogenic value chain. That include industrial gas, LNG and liquid hydrogen. Now another strength of company is its highly diversified customer base. They don't depend upon a particular industry, geography or client. In fact, the moat of their business can be gauged from the fact that they have a very high customer retention rate. Historically, their repeat customer rate is around 50%. Again, no dependency on single customer. Their largest customer in FY23 contributed 11.5% in revenue and top 10 customers have contributed around 46.5%. Then another strength I want to highlight is their strong financial profile. Company's revenue for FY21 stood at 608 crore that jumped to 803 crore and then 984 crore in FY23. For H1 of FY24, revenue stood at 578 crore. So consistent growth at good rate. Company's EBITDA margins have also been very stable and very healthy in the range of 20 to 25%. Its net profits have grown from 96 crore in FY21 to 152 crore and in H1 of FY24 it's around 103 crore so far. So again a healthy and consistent growth rate at a CAGR of around 25%. As far as leverage structure is concerned, company is net cash positive with total cash of 221 crore as of H1 of FY24. And this is precisely the reason why this IPO is an OFS. Not every company needs capital for its growth. Although it's rare, but Inox India falls in that category. It's similar to Tata Technology, which was also a complete OFS. The reason why Inox India is doing IPO is because around 45% of its business is from export and public listing gives them more transparency and improve their credibility for the global client. I hope you got the idea behind the IPO. So remember that all OFS are not bad. As far as profitability is concerned, company has maintained a very high ROE and ROCE. ROE is in the range of 25 to 27%. ROCE is in the range of around 35%. Although in H1, ROE and ROCE have reduced, but still very attractive. By the way, company is also consistently paying dividend. So overall, the financials of the company are super strong. Finally, if you look at the promoter pedigree, Inox India is part of Inox Group that is led by its chairman, Mr. Pawan Jain. He has done chemical engineering from IIT Delhi in 1972 and led the Inox Group since last 50 years that today enjoys a valuation of more than $5 billion. Inox India operations are led by second generation member of the family, Mr. Siddharth Jain, who is the son of Pawan Jain. Siddharth has done mechanical engineering from very reputed University of Michigan and MBA from NCR, France. He has been with the group since 2001. So overall, a perfect promoter pedigree with a right balance of top education and decades of experience and a proven track record. Now let us look at the future growth prospects. Okay, before we discuss the future growth prospects, a quick reminder folks that I also have a closed community of serious long-term investor on my website where I have a weekly series in which I share one exclusive video every week. This includes a close eye on key government initiative, macro trend that could help us identify the next multi-bagger, as well as I also share my own investment strategy and portfolio. I also keep a close eye on quarterly results to identify potential multi-bagger opportunity. In case you want to explore more, I provide the link in the pinned comment. Now, as far as future growth is concerned, there are multiple growth drivers for cryogenic equipment due to usage across sector. For instance, within metallurgy sector, production of metals such as your steel and aluminium is set to increase due to increasing infrastructure activity, then automobile production, especially the electric vehicle, and rise in consumer durable demand. Now, 73% of global steel production is done using the oxygen process. So as demand for steel would increase, demand for oxygen is likely to accelerate, creating demand for oxygen-related cryogenic equipment. Then cryogenic equipments are used in oil and gas industry for storage and handling of liquefied industrial gases. Then there's an increasing shift from your coal and oil to low carbon fuels like LNG. They would directly boost the demand for cryogenic equipment. Likewise, chemical sector has lot of usage for industrial gas and there's focus on decarbonization and more sustainable process that would again increase the demand for cryogenic equipment. Apart from this, the demand for hydrogen as green energy source is going to explode in the future as green hydrogen is considered the future fuel. And that's where you would need cryogenic equipments to store and transport hydrogen. Likewise, there's a huge surge in space and satellite programs that would again require cryogenic equipment to transport liquid oxygen, hydrogen, and so on. In fact, Inox India was a supplier for ISRO and played an important role in Chandrayaan-3 success. Although this segment currently contributes only around 5% of company's revenue, but I'm sure going forward, it would grow at a much faster rate. Not only that, there's a rising demand for cryogenic equipment in electronics industry, as manufacturing of semiconductors require multiple types of cryogenic gases. Apart from this, it also finds application in your medical science. Overall, the growth prospects of this industry are looking very, very bright. Now coming to Inox India, company has been growing at a healthy 20-25 CAGR rate and is aiming to grow at similar rate in the future, or even better than this. Interestingly, company is currently running on around 70% utilization rate, which means there's enough scope to meet the growing demand. Moreover, a fourth facility is also coming up where company has already done a capex of around 80 crore. And that would further help in growing the business in the future. So I hope you got a good sense of future growth prospects. Now let us look at the IPO details. So first of all, Inox India IPO is already live. Its window is between 14 to 18 December and there's already a lot of traction for this IPO. It already got oversubscribed on the first day itself. Its price band is between 627 to 660 rupee and it's a complete OFS worth 1459 crore. We have already discussed why it's an OFS. Basically, after this listing, promoter stake in the company would reduce from almost 100% to around 75%. So promoter would still be holding a major stake in the company. Now, minimum investment for retail investor is around 14,520 rupee and maximum limit is around 1.88 lakh rupee. For a retail investor applying for more than 1.88 lakh rupee, he or she would qualify as HNI, where the limit is from 1.88 to 9.87 lakh for small HNI and anything beyond that would be considered as big HNI. Now, a common question I get is between retail and HNI, which category has higher chances of allocation? So my personal experience is that it doesn't matter. Since both these categories would receive huge subscription, it would be a lottery. Personally, in case of Tata Technology, I've tried both and did not get allotment in any of them. So all the best for the allotments. In the grey market, companies already commanding a premium of more than 70%. I expect this premium to increase. The reason is attractive valuation and of course, the ongoing euphoria in IPO market. So basically at upper price band, Inox India would command a market cap of around 5,990 crore and a FY24 annualized PE ratio of 27, which is quite attractive considering the fundamentals and future growth prospects. Company has already raised the anchor fund round and has received a great response where 12 mutual funds have applied via multiple schemes that include top names like SBI, ICICI, HDFC, Nippon, Kotak, then Axis, Tata, then your Goldman Sachs, Nomura, Abu Dhabi Investment Authority, and so on. So I hope that helps you understand the interest from institutional investor in the company. By the way, there's an important update for retail investors who like to apply for IPOs. Since the IPO settlement day is now T+3, it means the last day of Inox India IPO is 18 December and lucky folks would get the share credited by 20th December itself. And on 21st December, the share would list on the market. So this is a great news. Earlier it used to take 10-15 days. It also means that you can now apply for multiple IPOs as your money won't be blocked for long duration. Okay, before we close this video, let's discuss the final part, which is key risk. Well, honestly speaking, this time I did not find too many risks in Inox India growth thesis. Yes, handling of cryogenic equipment is a bit tricky and any leakage can result in potential health hazard. But otherwise, I don't see any major risk. Generally, raw material fluctuation is a key risk for any manufacturing company. But in case of Inox India, they pass on the cost to end customer. And that is the reason they have a very stable kind of margin in last 2-3 years. As far as competition is concerned, there is no listed player, so can't comment on that. So overall, like I said, after Tata Technologies, Inox India IPO is looking very promising. A solid business model with leadership in the country, among very few players globally, very strong promoter pedigree, experienced team led by young blood of new generation, then very robust business model, very robust financials, high growth potential across industry, and a strong support from Indian government by Make in India and Atmanirbhar Bharat initiative. And the best part is attractive valuation. All these factors suggest a multi-bagger growth potential in Inox India. Although considering the current craze for IPO in India, it would be difficult to get the allotment. But we will separately discuss whether there are still opportunity post IPO or not. So this is it for this video. If you find it useful, do share it with your friends. And for more update, consider subscribing to this channel. Also, let me know which company you want me to cover next. I'll see you next video. Till then, take care.